Ever wondered if you have enough insurance or if you're properly covered? In this video, I'm going to go over some basic information about how to calculate how much insurance you need. Hi, my name is Jackie Yip. I'm a certified financial planner at Ocean 6 Wealth Advisory. So the very first question that most of my clients ask me is whether or not they have enough insurance. So I figured maybe I should just jump on video today and explain to you some of the ways that we use to help our clients get to that conclusion. Some of you guys might be sitting here watching and maybe even starting with the first question. Why should I even consider insurance in the first place? Well, we insure our cars, we insure our homes, and some of us even insure our cell phones. But we always forget to insure our biggest asset, and that is our ability to make an income. So this is the reason why you should even consider having some insurance in the first place in your financial plan. We work so hard to build up our business and have an income so that we can have the desired lifestyle that we want. In order for us to really calculate what our value of our insurance is, we first have to take a look as to what is the lifestyle that you're trying to protect. It is the most tax efficient planning tool you can have to leave money behind for your family and your loved ones. So I encourage you to sit down and have a review of your current insurance policy, get re-engaged as to why you have insurance policy or not have insurance policy, and finally, reevaluate if you're gonna need more insurance in your life. So let's dive into it, and let's look at the two ways to calculate what you need for insurance. At Ocean 6, we have a proprietary process known as the Blueprint that helps our clients get clarity and confidence with their financial plan. And our first step is to help you discover the future you and set some real goals for you to hit in the future. So there are two things that you need to calculate when you're thinking about the total amount of insurance that you need. One is what is the continuous income that you want to provide for your family? And the second is the continuous income you want to keep for your family. So let's start here. What is the financial commitment that you want to give to your family? The first thing we want to ask ourselves is what kind of savings do you want to be committed to? Things like children's education or a family vacation or maybe a family vacation cabin. Those are some of the financial commitments you might want to think about leaving behind for your family. Second is to pay down any debts. So a lot of our clients may have some mortgage debts, some personal line of credit, or maybe some business loan debts that they want to clear and get rid of so that their loved ones do not have to carry that debt going forward. Third is to distribute or evenly distribute some of the assets. So let's pretend that you have your favorite car in your collection and you really wanted to give it to one of your child, but then you don't want to neglect the same thing for your other child. So how do you divide this asset up? Well, one could use to have the car and the other could maybe have an insurance to replace the value of that car. So both would equally have some assets in their pockets. It is always the most effective tax planning tool for you to leave money behind for your loved ones. Life insurance is a tax-free payout to your families so that you do not have to declare it as part of your income or pay a huge tax bill. Life insurance is always a great tax planning tool because it helps solve our last and final tax bill. You might not realize this, but our highest tax bill in our lifetime would be the year that when we pass away because we have to realize all of our assets and all of our income in one go. So it is always the cheapest and most effective way to pay off that tax bill. Last and finally is final expenses. Final expenses are your funeral costs or as I like to call it, the big party at the end. So if your family wants to throw a big party at the end and there are certain things you want to happen in your funeral, some of this cost can be passed through the life insurance and not out of the estate and out of your pockets. The second part of this equation is the continuous income. How much income and for how long would you like to provide for your family? If you really want to get down to it, as financial planners, we have a tool called Time Value Money Calculator that can really get down to the exact amount of money you need if you wanted to calculate out the exact dollar and the exact time frame you want to provide for your family. But if you're just starting out right now, I would say use the 10 times 20 times rule. Why 10 and 20 times? It's very simple. If you're earning $100,000 right now, and if you want to completely replace that with investment return, let's pretend the investment is at 10% rate of return, you would now need $1 million, which is 10 times your salary, to earn the same $100,000. And now you can be able to continuously provide that income for the rest of the lifetime of the money. The other reason why we use, if you want to be a little bit more conservative, is that you could use the 20 times calculation, because let's pretend that your investment don't always get 10% rate of return. What if it gets 5% rate of return? Then you will need 20 times your income in order to generate the same $100,000. So that's it. If you add up your financial commitments and your continuous income needs for your family, that's how you get to the insurance amount that is right for you. Remember, life insurance isn't a one-size-fits-all solution. Just because you and your friend have the exact same scenario where you guys are in the same business, making the same income, you may have very different life insurance needs, because it depends on what your goals are and what you want to do for your family and your loved ones. So don't ever take advice from your family or your friends who may not be professionals at what they're doing, and speak with a professional about how to calculate the life insurance need that you will need that is best suited for your family. So to wrap this up, why do you want some life insurance in your financial portfolio? Very simple. It is the most tax-efficient way to leave money behind for your family, and it will help you create the legacy that you desire, to protect the lifestyle and the dreams that you've created. Remember, add up your financial commitments, add up the continuous income that you want for your family to have, and that's how you get into your total insurance need. Remember to review your current policies first, re-engage with the reasons why you need those life insurance in the first place, and reevaluate if it's still the right financial plan for you. If you want to speak with a financial professional today and review your financial needs, please book a call with me with the link down below. Again, my name is Jackie Ip, Certified Financial Planner at Ocean 6 Wealth Advisory, and I hope you enjoy this video.